All right. So guys, today we're going to focus on how to trade the bull market, right? So one thing that we haven't covered in the group is overlays, right? Overlay charts, otherwise known as spaghettis. So I have two main overlays, right, that I use. And you can see here that they have all of these coins plus 70 odd here. And again, same, all of these plus 90. So this is essentially the easiest way to scan for strength in the markets, right? Now, I want to make something super clear to you guys. What I'm going to do here is basically simplify the process for you, okay? There's a lot of ifs and buts and question marks in the air normally about how to trade these hyper trending conditions, and I know you guys aren't particularly used to trading these conditions either. So my main takeaway is to focus on strength, right? Focus on the strongest markets possible and only long, right? It's as simple as that. Don't try and play the laggards. Don't try and play the ones with the strongest technical setups or the most confluence. Simply play the strongest markets, right? That's all you guys need to do. Give me just 2 secs, guys. Alrighty. So as you can see here, peanut, right? So you're probably not going to believe me here, but I was thinking about assembling a new meme portfolio. Had a spreadsheet up yesterday, and peanut was the one I was going to go heaviest in. Came back from dinner last night, was absolutely shattered, and told myself I'd do it first thing in the morning. And yeah, absolute slap in the face, right? But regardless, the overlay charts are going to be your best friend, right? In these hyper trending conditions. So if anybody doesn't know how to put overlays together, it's super simple. You just create a chart for a single market, say BTC. Then you go into the plus icon here, and then you say, right, I want to add whatever it is, ETH to this overlay. You click on that, and ETH's now in the overlay, right? So this was plus 89 before, now it's plus 90, I believe. Because we've just added Ethereum in there, okay? And do this for as many markets as you like. I have my what I call super charts split into 2 different charts, right? But if you want to, you can keep it all to one chart. I'm not too sure what the limitation is for TradingView in terms of how many overlays you can have on one chart, so you'll need to explore that. But yeah, basically I use the 2, and essentially what we're doing is basically looking for these outliers, right? So we're looking for outliers such as peanut. To distinguish which the outliers are, you simply double click, right? Peanut USDT. And then go on to its basic isolated candlestick chart, right? So we can do this a number of ways, basically. Essentially, what you need to make sure you're doing with these overlays is making sure that you're staying very updated. So new launches will be the best markets to be longing, right? So new launches in the most hyped sectors, aka memes at the moment, will be doing very, very well. So constantly scan for new listings and then update your overlays as you go along, right? So for instance, what I'd be doing when I'm scanning is I'd click on this, I'd see it's peanut, then go over to a blank chart, and you can see that I've already set this up from this morning, right? So essentially, yeah, I'm basically scanning primarily on the daily, but obviously for these fresh launches, we're going to have to dial down. So we look at the 4 hour, and we can see that even on the 4 hour, we've got a nice demand zone. here. The likelihood that we get a retest all the way down to this low is extremely rare if we are to really move into hypertrending conditions. So we can then dial it down a bit more, go to the 30-minute, we can see another clean intra-demand cluster here. Well, I say clean, take it with a pinch of salt. Those that are familiar with my educational course will know that we want to really see a cluster form here, right, like so, without this gappiness. But flow zone members will also know that that during hypertrending conditions, we have to drop our stringency in terms of how we're marking out these zones and grading them, right? So for me, this is an acceptable cluster to mark out. What's going on, Kay? Lewis, Chapel? So simply focus on the strong markets, and we can just go through a few of them, right? So at the moment, all we have on peanuts are triggers to the downside, right? When I mean triggers to the downside, I'm looking for levels to be swept or intra-demand zones, clean intra-demand zones to form. And this is what that would look like, right? We have to also keep our eye on these markers. So you can see that I've set an alert here. That's all well and good, right? If price does come down here, then we're looking for either or both of two things. Either speed into the level, right? So an inefficient move into the level. Or we're looking for a divergence, right? So price to come down. Like so. Let's say this last leg is the diverging leg, right? Or both, okay? So both would look something like this. We move up, move down, right? Let's say we move down to, we wick in, we close above, and we diverge, and then we move, right? So you don't need both, but you need one or the other, right? You need one or the other. So, like I said, all well and good if price comes down. We know what we want to see. We're waiting patiently for it. But if we do start moving into parabolic conditions, for instance, we're not going to get those retests, right? So, you know, members of my group talking yesterday about BTC, 15-minute demand getting front run. You'll see that a lot, right? You're going to see that a hell of a lot. So we need to also keep our eyes on this market, the hot markets, to draw out triggers to the upside as they develop, right? So what does that look like? That could look like, right, that could look like this. SR. Consolidation. Break, right? And then we play that to the upside, okay? At the moment, it's not good enough to call this resistance. It's just price inflow. But if we do get price that then starts testing this and creating more of a solid, concrete horizontal level to work with, then we can take it as a trigger, right? So that's an example of price forming a trigger to the upside in terms of a horizontal level. And guys, like if you've seen my breakout video, this will be all too familiar to you guys. If you haven't, I recommend you watch it because it will cover this in great detail. And to be honest, triggers to the upside are going to be much more commonplace than triggers to the downside. We have to be ready for both, but we also can't just wait for triggers to the downside and watch price run away from us, right? That's not feasible. And it will happen many, many times. So horizontal covered. The next would be diagonal, right? Something like this. So the reason obviously we need to monitor price is because we need to see if these setups are forming, right? We can't simply rely on alerts. We can then add alerts on the trend line, right? So we can add alerts on the trend line. but we have to also be monitoring price to see when the touch points are creating this symmetrical triangle structure, right? Likewise, we have to be present and acknowledging when we're getting touch points that are forming a horizontal level to break out to the upside. So we can run through a couple of examples I want to run through 3 examples with you guys. The first is a horizontal breakout, the second a diagonal breakout, and the third what I call an LTA, last trouble area, which is something that you have to be very cognizant of when you're taking these breakout trades. So let's start with the diagonal because it's actually here. And one of the areas of interest that I'm going to be paying close attention to going forward is going to be fresh listings on Bybit, right? When we get really bullish conditions, Bybit coins tend to go pretty nuts, as you can see here. Peanut, in the right hype category, meme, freshly listed on Bybit, 1 day old. Diagonal breakout here. So what this trade would have looked like: breakout candle, green pin bar, enter on the close, stop either here or here. Personally, I would advocate going wider on the stops. Students of mine know that I always advocate wide stops and lower size. Do not feel like you have to capitalize on each move to maximum opportunity. Take small size, take regular stabs, take wide stops. And I mean, this could even be wider, right? This could even be wider to cater for this. For a shallow sweep here. But guys, let the current carry you. Survive your positions, right? Survive your positions is the most important takeaway. So in this case, it's keeping stops wide. As a result of keeping stops wide, you're lowering your size. But what will happen when you lower your size is you will be able to sleep at night. You'll be able to be in multiple positions. You'll be able to let the current carry you, and you won't be flooded with cortisol, right? So when we get stressed, we get flooded with cortisol and things like this happen, right? Let me just clean this up. Let's say Peanut didn't break out, right? It didn't break out. We took the breakout candle and it does something like this, right? It's chopping around here underwater. We're negative on the position. When we size in, this becomes very stressful. Our brains release cortisol, and as a result of that, we have impaired cognition, essentially. We're not thinking rationally. What our brains are trying to do is take us out of that stressed state, right? So over time, you'll basically have something I call time decay. I'm not talking about the options markets, right? So it's time decay on the trade itself, and it's basically a decay of your psychological condition. Essentially what will happen is as time goes on and you're watching this trade bleed out, you're underwater, your P&L goes consistently negative, your brain will look to protect you, right? So the mind will always look for ways to protect you, whether that's physically or mentally. In this case, you're in a stressed state of mind, and it wants to take you out of that stressed state of mind, right? So in this case, it will tell you, you'll have an inner voice to tell you to cut the position, and you'll start thinking of all the reasons why you need to be out of the position. And the simple logic of why to be in the position will just be lost as background noise, essentially. Fresh listing on Bybit within the right category, looking good, right? It's maintaining its structure here. Even if it was doing this sort of thing, right? We could probably draw a lower time frame range here. And yeah, it's very plausible that this goes for more upside, but your brain will basically be fixed into a state of cognition where it's trying to remove you from that stress state. So Look, where we're at the moment in the market, if I'm correct in my thinking, and I'm sure all of you guys are aligned in this pattern of thought as well, that we're going to have very bullish conditions going forward, and then we're going to have very bearish conditions going forward after that, right? Both are hyper directional, right? They're very trending markets, and there will be plenty of opportunity to capitalize on exciting markets to trade, essentially. It's extremely easy, especially with Twitter, social media, etc., to feel constantly underexposed. But you have to really try and fight that off, and also stave off greed, essentially, right? You have to fight those two inner voices, because essentially what you want to be doing, right? And a good tester of this is when you go to bed, right? You're sleeping on positions. If you're getting up in the night, if you're thinking about the position last thing before bed and first thing in the morning, itching to grab your phone and check the charts, that's a good indicator that you've oversized, right? So next time, drop that trade by, say, 30% in terms of sizing, and then see that night if you can sleep all right, okay? If you can't, then you're going to lose sleep. You're going to be in a much more stressed state of mind, but also much more exhausted, and you won't be thinking rationally. And look, these markets can be very, very simple to trade, right? You can just like right curve it and smash it, essentially, right? But you have to be in good condition, in good mental condition. So anyway, that's just a rant about sizing, because I know it's very tempting to oversize, but believe me, it won't do you any good. So if you miss the first move, this is from Louis, if you miss the first move, you just stay out until you see a trigger to the upside. Or to the downside, sure, yeah. Essentially, that's what we're looking for. Or you just move on to another market, right? There are so many markets to trade, and there are so many markets that are coming out as fresh listings as well now because of the conditions. And I'm getting the boring stuff out of the way here, but I need to say it as well. Don't take any shorts, right? Longs only. I hope that goes without saying. Please don't start looking at stuff like this, for instance, and go, okay, cool. We've got a double bearish divergence here. Let's max short this. That's not what we should be doing, right? When the market is hyper trending, even for myself, I'm not gonna hedge. I'm not gonna take counter trend positions, right? So why should you guys be doing that? It's just not sensible, right? Look for the next setup on the long side and just wait patiently for it. So that was the diagonal example. Horizontal is Sui. Sorry to bore members of the flow zone here that know I took this position, but this is a great example, right? So if we go to our super chart overlay, one of these is Sui. Was Sui. Anyway, hourly, right? Just to get rid of this alert. It's not necessary anymore. So hourly. Firstly, actually, let's go to the daily. Replay. Back to here. So first thing to note, right? Sui, one of the strongest markets. One of the strongest markets. Was very clear from the overlays at the time, right? It was a clear outlier, right? Daily RSI here, hovering around 50. This is exactly what we want to see. Again, if you watch the Breakouts video, I talk a lot about the RSI 50 level, RSI resets, etc. the two green lights that we want to see being RSI resets and consolidation under resistance. And then we dial it down, right? So in this case, it was going down to the hourly, which is my primary time frame of operation. I'm getting very lost here. What's going on? Oh, it's because I'm on replay. So, where are we? SUI, hourly. Right? So like I just said, two green lights. RSI reset. The daily gives us that cleanly. And then we have this lovely pocket of consolidation underneath the resistance level. Right, so this is exactly the structure we want to see. And as you can see in here, right, we're not getting any easy entries. So if, I often say, if you're stalking this market, and you want to take the more aggressive entry for the breakout, you're looking at something like this low here to be taken, right? And you already know that the price is consolidating underneath resistance, right? You've got clear touch points here. Nice level to work with using the candle bodies. And if we do get that sweep entry, you can take an aggressive installment, fine. But because SUI is such a strong market, we do not get that opportunity. Price simply moves up. And we're looking at taking the breakout candle 100% installment with stop underneath the consolidation that led to the breakout, right? So moving on to what I wanted to touch on, which you have to be wary of, the last trouble area, is basically, look, when we're taking horizontal levels, marking out horizontals, more often than not, we're using the bodies, right? In this case, it's the candle bodies. But there will be wicks left to the upside, more often than not, right? So in this case, we're looking at this as our last trouble area, where price could hypothetically sweep it and then move to the downside. So you could get your technical trigger, which would be here. Your technical trigger's here because you get a close above the SR level. But you also have swept this last trouble area here, right? So I didn't actually enter here because although I was desperate to get into position, I was also very aware that this could sweep here, swing fail, and yeah, essentially just do this, right? So waited another 2 hours patiently, stalking the screens, well, trying not to, and then entered on this candle here, right? Because this doesn't look like it's pushing down, right? If you're going to see a push down, it's normally going to be much more immediate than that off the back of the sweep. So this candle here showed me that there's still momentum to the upside, and I took 100% installment here. Right. Stop was at the base of the consolidation. I believe it was either here or here, either or basically. And aiming for something like this, right? So super simple, right? There's not much thinking that has to go into this. SUI, we know off the back of the chart overlays, the super charts is one of the strongest markets. We have a textbook pocket of consolidation here that lasts for 3.5 days. We come into the last trouble area here. We get no momentum to the downside. We already know the positioning of the daily in terms of the RSI, etc. And that's it, right? 100% installment, no position building. 100% on this candle here when you want to take your stab. And stop underneath the consolidation. What I've seen some people do in the past is put stop underneath the breakout candle. Obviously, in this case, it looks ridiculous. It's here. But even if that wick was, or if the candle was more full-bodied and it came down to here, still don't do that, because sometimes we can have fuckery whereby it does this, like does this, and then goes for it, right? Still technically retaining market structure because it's holding this low, but it takes you out, right? So again, going back to what I said earlier, stops wide. You need to survive, right? You will more often, if you know, it's very simple to analyze these trades, right? It's very simple. More often than not, you will be right, but you have to survive, right? You have to survive. And the only thing that's going to come in the way of you and being up this much on the trade is the demon of greed, right? So it's the inner demon of greed that you have to stave off, because it's that voice in your head that says, this is the trade of the century. This is the trade of the bull run. I need to size in max. And as a result, I can't have a stop here, right? It's simply too wide for me. My stop has to be underneath this cluster here. And yeah, in this case, of course, it would have done you well, right? In this case, it would have done you well, but it's not best practice going forward, because believe me, you will get stopped out multiple times. You'll see this stop you out, go on to run. And essentially what we want to be doing in these markets is just setting up a framework by which we can approach the markets responsibly, consistently, and nail trades one after the other, compound your account, move those gains into spot positions if you feel like it, or simply, you know, start taking higher risk throughout the markets as it evolves. Yeah, it's your call, but compounding is the name of the game, right? We need to be sensible when we do so. We're not looking for the home runs, right? Even though this is a great trade, great position to be in, we're not looking for the home runs. We're looking to build up the account. I'm just catching up with some of the messages. Been shorting every bearish div on the 15-minute. Any advice? Yeah, there's a great group that I run called the Flow Zone. You should pop your head in, mate. When you're in alts, you don't use delta. You rely on AO, RSI, momentum, speed, and SR. Essentially, yeah. I don't use delta, no. I purely use delta for BTC and ETH on these aggregated templates, which are taking 13 markets worth of valid data here, and on ETH 27. There are some people that use Velo, but it's not it's not reliable enough in my opinion to do it right. And you also don't need it. An aphorism that I've been preaching week in, week out is that the more trending the market is, the less confluence you need. The less trending the market is, the more confluence you need, right? Delta is a layer of confluence, right, to my trading system. And it's one that I'm happy to remove and obviate from the equation when I'm trying to play hyper-trending markets, keeping things very simple, which is primarily why I only trade alts when the market is very directional. Okay, so what next? I wanted to run through another example of a last trouble area where it failed. Okay. So this was a chart I was taking a look at yesterday, I believe. Right, it was plucked out from the overlay, number one, right? Strong market. outlier to the upside. And essentially this happened, right? So we've got a nice horizontal level to work with here. Sorry, I need to expand the candles, I think, for you guys to see it clearer. Nice horizontal level to work with. Number one. Number two. Number three. The more taps, the better, guys, as well. If you don't know how to mark these levels, it's just simple SR. But as well, we have this high here, right? So bodies, last trouble area. Swept, the last trouble area, comes down, does it again, and just moves to the downside, right? So chopping around here, multiple sweeps, multiple takeouts, sweeps of sweeps, essentially, is what's going on. But you have to be very wary when trading these breakouts, right? That this can occur, and it's very difficult to manage it when this happens. But what I would say is just consistently monitor the charts. Don't sort of set and forget your trades. Consistently monitor the charts, analyze the strength of the breakout. You'll be able to tell and get a feel for when breakouts are very obvious. That does take a little bit of experience, of course, gut and intuition. But for instance, with Sui, it was a straight runner, right? And that's essentially what you want to see. You don't want to see chop, right? You don't want to see sweeps of sweeps and chop. That's not what you want to see. Which timeframes do you use for candle closes when taking breakout trades with 100% size, like Sui, only H1 since no installments? H1, yeah. So essentially, you take the installment on the time frame that you're trading, right? So for instance, if you're looking at this, right, price messing around, comes up here, consolidates, punches up, and let's say this is on the 4 hour, then you take the 4 hour close. If this is on the 30 minute, you take the 30 minute close. I would not advocate going too low time frame. Wouldn't go below, say, 30 at a push, 15. Stick to the hourly plus if you can. It will basically give you, it will basically eradicate all the false signals that you'll hear in the markets. And there will be a lot of false breaks on the lower time frames. So try and stick to the hourly plus would be my best advice. Another thing I wanted to touch on is risk management, right? Risk management, manage your risk. One common mistake that I see people make in these conditions is they think that they're managing their risk and they go into a position with, say, set figure of 2% of their total. First, I want to sort of just go through and make it clear that when people say 2% risk, they're not talking about 2% of their account, right? We don't leave 100% of our net worth on a trading account, right? Leverage is there to facilitate you leaving very little out of your own custody. So when you're operating on percentage basis risk windows, then you're looking at basically your total liquid asset net worth, right? You're not looking at just what you have on the exchanges. But let's assume you know this and you're allocating, let's say, a risk window of 1.5 to 2% risk per trade, right? Depending on how clean the trade is. And you find a trade, it's 10 out of 10 in your opinion. It's like the Sui trade, you risk 2%. And then you go on to find another trade that looks great. Say this one's got a diagonal break, right? Also another strong market within the right hype sectors, fresh buy bit listing, whatever it is, very tempting. You allocate another 2% to that. Then you have another alt that goes down and dips into demand, diverges. You can't stay out of that trade either. you take it 2%, and before you know it, you're at 6% risk, right? So you're at 6% long exposure to the markets. If BTC corrects, right, let's say, God forbid, we have a wipeout, 30% correction across the board, you're stopped on all of your trades, right? You're stopped on all of your trades, and your overall exposure was just way too high. So that's just a note that it's not about just purely individual risk per trade, right? Just make sure that once you're in position, you have total risk windows as well, not just individual ones. It's an easy trap to fall into. Sometimes I do it as well. So it's also a message to myself here, really. When I get carried away, I think I'm sticking to my risk, but really I've got multiple trades running, and I'm again in a compromised position. I'm on the back foot if we do get a market wipeout. And again, you become in that, impaired state of thinking, overexposed, cortisol released, and that's just a common trap, and one that I want you guys to stay out of, basically. Right, I'll do some of your alts in a bit, guys. If I'm new and only have like 1K, is it better to divide and risk like 5%, $50? It depends. It depends if you're talking about 1K being your trading account or your entire liquid net worth, and it also depends about how experienced you are in trading. Exactly what Morin said, spot lev. So yeah, essentially what you guys should be doing as a general rule, and I don't talk about the spot side of things too much because I like focusing purely on trading, is having spot portfolios there that are doing all the work for you, right? You have your spot portfolios that are based on fundamentals or not, right? It can be memes, as long as they're within the right hype sectors. When putting together your spot portfolios, you have to let the market determine what your portfolio allocation looks like, right? So what does that mean? That means that in the case of the recent market, you look at the strongest performers, you look at your overlays, and you say, right, what's this? Peanut, meme. Degen, meme. Doge, meme, right? I didn't even know that clicking on these, but I know that memes have been the strongest markets, right? So spot memes, right? You can also have your alts of preference in there as well. So for me, that looks like gaming, a bit of AI, BTC ecosystem plays. You have spot running and doing all the work for you. You do not touch your spot bags. I don't like setting up spot bags as trades with fixed entry, stop losses and targets. I simply enter without stops, right? What I'm willing to risk on my spot portfolio is what I'm willing to risk, right? It could all go to zero. The market could crash. We could have World War III tomorrow and I lose all those assets, but I don't want to have stop losses on my spot holdings, right? I use those in trading, right? That's the perpetual markets only. Spot, set and forget, don't look at it, check it in 6 months, right? So yeah, it's when you say you have 1K, I need to know both what your experience is as a trader, because if you have little experience, I'd say simply stick to spot. If your desired outcome is to be financially better off, then stick to spot. If your desired outcome is to go through a world of pain and learn some lessons along the way, then you can dip into perps. That's up to you. All right. You never add MAs to your trading system. No. The closest thing I come to in terms of moving averages is 4-hour guppy, which is part of my trend analysis. Again, much more important in bracketing and range bound conditions as opposed to hyper trending markets. I don't need to know what the trend's saying at the moment. I know exactly where the trend is, where its direction is, and what button I should be pressing.